So I'd like to welcome you to the financial reporting online support class. My name is Ngandalo Joseph, and I'll be your tutor for this particular important class. We thought, of course, of supporting our students, online because of what is happening in our nation. And of course, you can always get back to us if you happen to have any question. So today we want to focus on the introduction to financial statements, IS1. Okay, at the end of this session, you should be able to prepare a complete set of financial statements in accordance with IS1. And I'm going to give you some, question, and I'm going to discuss a special institution which is not into profit making. I'm going to discuss, non-commercial organizations. So the objective of IS1 is to give us guidance on the preparation and presentation of single entity financial statements. So we do have what we call general purpose financial statements, and these require some rules, to prepare. IS1 overview. In the standard, of course, we may not touch everything, but the standard makes it clear that when we prepare the financial statements for the current year, we need to prepare comparative statements for the previous year. So that's the reason why when you pick up financial statements for a public listed company, you may discover that they will have the line for the current year, let's say 2019, and also the line for the previous year, let us say 2018. The standard prohibits the offsetting of assets and liabilities as well as income and expenses. Of course, this will give rise to misleading reporting. So the standard is clear, says assets and liabilities must be separated and presented as they are. Then we must also adopt what we call a consistent presentation currency. Of course, the presentation currency is the currency that we use to prepare our financial statements. At a higher level, you would appreciate that discussion. The standard deals with the issues of materiality. Remember, under materiality, we only account for items that are material. And materiality, for an item to be material, rather, must be significant in the eyes of users. Okay. Then there's an aspect of accruals. Financial statements are prepared on accruals basis, meaning that the effects of business transactions are recognized upon occurrence, not when cash exchanges hands. Going concern is the only underlying assumption of the financial statements. I would like you to remember that. Under going concern, of course, this should be the cheapest, term in our course. The business is expected to be in existence for the foreseeable future. I think you still remember that. All right. The components of financial statements, what is made up, or what makes up your complete set of financial statements. Number one, the position statement, which we now call the statement of financial position. Number two, the performance statement, which we now call the statement of profit or loss. We now have what we call other comprehensive income. The cash statement, which is a statement of cash flows. The statement of changes in equity, which shows us owner's interest in the business. Then also the financial statements for those items which we cannot recognize in the statements, as well as comparatives. These are financial statements from the previous year. Okay, so your structure and content of the FS must isolate the following. Number one, the name of the reporting entity or group. Very important. The period which is being covered. Are you covering 12 months or 9 months? The presentation currency, of course, we've discussed that. Is it the kwacha or the dollar? The level of rounding off, all those items must be discussed. Okay, so we must appreciate the fact that some institutions do not exist to provide, to make profit rather, but to provide a service. So we see also financial reporting is still relevant to non-trading organizations. So at a point in time, we may have to discuss this. Okay, it's a by the way thing, but we feel that even if institutions that do not exist to make profits need not to make emphasis on profits, but they still account for assets and liabilities, and therefore financial reporting is still relevant to those as well. You need to know and master the users of accounting information, please, and their potential information needs. I think I can leave this one out for you to do some bit of research. Already the work is starting there. Okay, so thank you very much for listening in to this introductory video, and I hope that you can always revert with some question. I'll send a question picklet. If I've not sent one, please remind me. Thank you so very much. I want to end there.